Guys, what's going on? Happy Wednesday, Amir Garami. I wanted to chat with you really briefly about a common credit card myth that could be costing you thousands of dollars due to lower credit scores because of not realizing how credit card companies report your balance to the credit bureaus and how that impacts your credit score. So, most borrowers that I talk to are generally pretty responsible. They either carry a very low revolving balance or they pay their monthly balance off in full every month. That's the right thing to do, and that's great. Now, although that's the right thing to do, the way you do it and the way you structure your finances for a loan will have to change so that you could utilize the best credit score that you could possibly have. Let me explain it to you. Credit card companies report your balance as of your statement date. So if your statements run from, like, let's say the first of the month to the first of the month, they're reporting your balance as of the first of the month to the credit bureaus. Now, let's say that your payment date, your payment due date is not the first of the month, but it's the 10th of the month. Okay? So if that's the case, you may be paying your monthly payments on time with your credit card vendor and you're paying off the card in full. But the credit bureaus don't see that because they see that on the first of the month, when your credit card company is reporting that balance, okay, that your balance is at a certain amount. They don't see that you pay it off in full 9-10 days later. That balance can impact your credit score by roughly 20, 30, 40 points. I've seen on a loan earlier this month that the difference between the balance that's being reported and what their true credit score should have been was 42 points. Now, how do you combat this? Call your credit card company if you don't know your statement dates. If you do know your statement dates, make sure that before your lender pulls your credit score, that you've paid down that balance to less than 10% of the max available to you. So if your credit card has a balance, max balance of $5,000, and let's say you have $4,500 on it today, make sure that before your mortgage company pulls your credit score, that you've paid that credit card down to $500. Okay, and make sure that all this happens before your statement date and before the date that your credit card company, let's say American Express or whatever Visa you use, is reporting that information to the bureaus. Guys, changing your score by 20, 30, 40 points can save you thousands over the life of a loan. I hope that helps. Have a great day.